In today's video, I'm going to be talking about what is going on with the crypto market. Bitcoin has looked weak. Altcoins and Ethereum have also been selling off over the past few days. So I want to run through how long this downturn could potentially last. And I also want to give my verdict on what's actually causing this, because to understand how things could potentially improve, you also need to understand what's actually causing the weakness right now. And in all of this weakness, I do think there is a big opportunity, which we're going to get into in today's video. And I think it's a massive opportunity if you play your cards right. At the end, I'm also going to run through a couple of altcoin setups, which in light of the downturn on Bitcoin and Ethereum still look super strong. So sit back, relax, enjoy the video. I think it's going to be super informative for anyone that wants a comprehensive overview of where we currently sit in the cycle. It's going to be no BS, and it's going to cut straight to the chase of what is happening in crypto right now. Make sure you do subscribe for daily content like this. At the end of the show, I'm also going to be picking some random people that signed up for the Blofin campaign, and I'm going to be airdropping live here people $100. So we're going to randomly pick. Make sure if you do have a Blofin account under my link, you stick around for the end, because you could be winning $100 today. We're going to pick a few people, and we'll run that again in the next show. So firstly, let's start with Bitcoin. Look, not much to report on Bitcoin from my last show and my stream yesterday with Paradise. The market is still pretty much in this downtrend. Bitcoin is currently just reacting to this channel. There is a horizontal level which aligns with the bottom of the channel where I am interested for a reaction. It's down in this region here. You could see that is a point of interest. If you draw this out as a rectangle, you can see that there is confluence between this horizontal zone and the channel low. If we did see a reaction to that zone, zooming out, I don't think it's totally unrealistic that we could come down here and attempt. And if we do, let's say sweep this level, that would be my ultimate bid level for a Bitcoin. That would also probably align with the 4K level on ETH and thus altcoins as well. And then you're looking for some strength to climb out of it. We may not actually get there. This could be a reversal, because technically this is a higher low. I know it's a lower low on the low time frame, so we haven't taken out these lows yet. So I guess it's a wait and see. I guess the bullish scenario for Bitcoin would be getting above this mid-range channel zone here at 115. So there's kind of two scenarios right now. One, we play the sweep to the downside and look to long this level. Hopefully we don't break below, because then 100K is in play, but I don't think that'll be the case. I'll go through why I think that is in a minute here. And then the other potential scenario here is a reclaim setup at 115K heading towards the channel high. Paradise breaks these down in depth. He's a much better trader than me on his brand new channel. So he just launched a Paradise Trade channel. I'm going to leave a link in the description below to the new channel. Make sure you subscribe. There is a market update today that went out. I think he's going to be starting with market updates every Monday, Wednesday, and Friday. They're sub 10 minutes, so they're super digestible, and they give you more of a trading lens on the market. Obviously, although I can do TA, I am more of a fundamental analyst, and that is where I get my edge in the market. So yeah, go and check out that video, because he goes through the trading side of things a little bit more, but that's the TLDR on my side. It's very interesting at the moment, though, that Bitcoin looks weak. I mean, structurally, it's in a downtrend. It has been since pretty much the beginning of July, but Ethereum actually looks much better. And if you look at the technicals for Ethereum, you can see it actually hasn't broken below the daily money noodle, whereas Bitcoin has broken below the H4 and also the daily money noodle a couple of days ago. Now, it hasn't actually had 2 consecutive closes below, so it could get back above. There's still hope here, but Bitcoin looks like it'll take a little bit longer to resolve. ETH, on the other hand, looks a lot stronger in terms of momentum. And once you start to unpack the dynamics at play, it really paints a picture of where we currently sit in the cycle. And basically, here's the dynamic. Bitcoin, it ran up pretty aggressively on the Michael Saylor MicroStrategy bid. Now, we have seen in recent times, Saylor's clip is starting to get smaller. The recent buy was one of the smallest that he's made in recent times, and he did make some changes, which has the market a little bit concerned about MicroStrategy. So with MicroStrategy cooling off, we've also seen a de-risking in Bitcoin, which has halted Bitcoin's momentum. The other factor at play right now is that the Bitcoin Treasury companies just can't sustain the velocity of bids that they were exhibiting in late 2024 and throughout 2025. And I think the Treasury stocks, you can see the crypto Treasury company trading volume, are also starting to reflect this decline in appetite, because you are now seeing Ethereum actually starting to flip Bitcoin, which is quite interesting. And I think when you look at it in terms of where the whole Treasury trade is on Bitcoin versus Ethereum, the Bitcoin trade has been going for many years with Saylor, and it feels like it's reached a bit of a crescendo, whereas with Ethereum, there's still $27 billion of sideline capital that hasn't yet gone into ETH that is ready to be deployed in these DATs, these treasury companies. So I think in terms of just how far into the treasury cycle Ethereum is, it's less far in than Bitcoin. Now, there's a strong argument that Bitcoin has a better narrative than Ethereum, right? The digital gold narrative, especially with stocks reaching new highs, inflation, we potentially might see rate cuts. We're going to discuss what's happening with that because that's actually something that's spooking the market at the moment. All of that is good for Bitcoin, which is a liquidity sponge. Maybe that doesn't benefit Ethereum as directly, but Ethereum has the stronger alignment in terms of where it is in the cycle with this treasury trade. And I think that's fundamentally one of the reasons why Bitcoin is looking weak and Ethereum's looking strong. But Ethereum Strength has actually started to take some of the market with it, which is quite a good thing because Ethereum's the leader of the alts. So I've been quite surprised how strong alts actually look right now compared to past dips. I mean, think about some of the past dips we got on altcoins. Like a month ago, a couple of months prior, every time Bitcoin would sneeze, alts would go down 20, 30%. Yes, alts have still been hit over the past week, but they've been hit significantly less in the face of Bitcoin adversity. And you could see this because others BTC maintained its weekly line in the sand. You can see this is a very key level. This was the reversal level for others BTC. It's still pushing up into resistance, but it isn't rejecting hard off resistance, which in previous times with Bitcoin dipping, you would have actually seen. And on the daily noodle, others BTC, others, by the way, is the altcoin market cap excluding the top 10, it was in a downtrend and it's now flipped the noodle to create a bullish trend. And if this can hold, you might actually see continuation up to this level here. So although the picture for Bitcoin looks a little bit weak, the picture for Ethereum looks significantly better, and that's actually holding up the altcoin market. So the bad news, Bitcoin looks heavy. Ethereum also looks a tad heavy on the lower time frames. Like if you go to the H4 as well, you can see that it did break momentum to the downside on the H4 noodle. But if you go to the daily, it still paints a picture on Ethereum and on others, so on altcoins, that the market structurally is still looking okay. So I think that is an interesting dynamic to account for. But why is the market shaky? Like, if Ethereum has this big treasury bid and altcoins actually look good in terms of relative strength, why are we seeing altcoins running? And why are we seeing Bitcoin going down so much? It can't just be the treasury trade, right? And correct, it's not just the treasury trade. Otherwise, Bitcoin would probably still be maybe not blasting to new highs, but it would still be, near new highs, at least significantly closer to the channel high. But the reason why the market is looking a bit shaky at the moment is because it's very scared or it's uncertain about what's to come at Jackson Hole. People are starting to worry that Fed Chair Powell is going to come out with a hawkish stance. The odds of rate cuts are actually diminishing. So this was like 99% at one point. Strong PPI data has actually reduced the likelihood of rate cuts to 84%. Now, the market still thinks it's going to happen, but it's starting to plant that seed of doubt. And even if it does happen, is he going to come out and maybe affect the dot plot? So the future likelihood of rate cuts. There's kind of a little bit of a war right now between Trump and Powell because Trump is calling for lower rates, but Powell's still in until I think May. So he's still got runway here to play hardball even before Trump gets his way. And the market is starting to price that in the short term. That's why Rand here says Jackson Hole is like FOMC on steroids, because it's probably the most pivotal FOMC in some time, because the market has been running on the pretense that we are going to get rate cuts. So the market wants to see rate cuts. It's already priced it in. The market's decline is starting to unwind the probability just slightly. It hasn't completely unwound the probability, or we would have seen probably Bitcoin go back closer to 100K, but it's the uncertainty which has caused the sell-off, and that's also come at a time where Saylor's clip had started to diminish and momentum had stalled on Bitcoin. Also, when it tried to break all-time highs, it tried multiple times and kept failing. So there's heavy short interest around 120K, which kept pushing Bitcoin down, meaning it didn't have the necessary strength to push through and head higher. So all this paints the picture for why the market is now looking structurally weaker. And I think it's very important to take new data into account. I don't understand this whole thing in crypto about being stubborn. You read the comments sometimes about flip-flopping, and everyone hates flip-flopping. Everyone just wants to be bullish all the time, and that's fine. I still am macro bullish, and I'll discuss the exact roadmap later in this video that I think we're going to go through from August, September, October, November. I think to spoil that section later in the video a little bit, there's still going to be upside in the market, and I still think balance of probabilities ETH hits new highs. But you'd be stupid not to adjust your timeline a little bit, and you would be stupid not to recalibrate how you play the short term based on new information. You have to be taking new information into account. Price action is great information. How the market reacts to news is extremely valuable because that's going to dictate how you actually trade the market and what coins you get into and how you play the relative strength rotation game, which we're also going to talk about later in the video. So I want to make sure as investors you are actually adaptive and are constantly staying up to date with the market, or else complacency is going to inevitably lead to leaving not just gains on the table, but also potentially exposing yourself to unnecessary downside. I actually said in the Discord and I think yesterday as well on the show, and I think Monday actually, that I de-risked over the weekend. So this was, something that I did just to protect myself heading into what I thought would be a little bit of an uncertain start to the week, and that's, what we've started to see. So that kind of repositioning, I think, is very valuable to protect myself because I know what's coming later in the cycle. So I don't want to wreck myself before we get there. The entire thing with these cycles is you have to stay in the game. And look at how many people have dropped out of the game. Look at how many people have given up. You can see it in the YouTube numbers. I know Google searches were up, but overall, retail participation is way down. All of the top channels' views are down. X engagement's down across the board, and that's because a lot of people gave up. They can't deal with this chop, and that's why you need to implement risk management. I want to go through Fabian's take on Jackson Hole because he's a great macro analyst. He's in the Miles High Club, and I think he has a pretty good read here on the market. And then we are going to get into what I think happens next in the markets and what altcoins I'm playing. So Fabian says he's been given some more thought to Jackson Hole's meeting. Coming into the week, I was leaning towards Powell opening the door to a September rate cut following the weak labor data reported earlier this month, since the Fed usually likes to telegraph their next move in advance. But with the recent sticky inflation data, so PPI, and the fact that we have another month of critical data releases before they formally make their decision in September, I'm on the fence about whether Powell will want to commit so early now. I think the outcome will set the stage for how we trade into September's FOMC meeting. If Powell throws cold water on the hopes of a dovish pivot during Jackson Hole, with markets currently on a high note and pricing in over 90%, it's now dropped to 85%, odds of a cut, then I could see us repeating the classic sell into the end of the month plus first week of the new month, in which case I would want to buy ahead of FOMC, he's reading my mind, in mid-September, as long as the macro data releases coming up aren't terrible. But if instead Powell softens his tone towards a potential rate cut, then we have a few more weeks for the market to front run it a little bit more before I start thinking about whether FOMC would be a sell the news event or not. September is also projected to be the worst month for liquidity this summer, as the bulk of the TGA rebuild hits markets once the RRP is fully drained after next week and coupon issuance ramps up. So we're talking about global liquidity here, specifically US liquidity. We spoke about this briefly on the last stream, and it could potentially be offset by the positive liquidity dynamics of rate cuts if the Fed moves ahead with them, but could cause some turbulence if not. Anyway, for now, I'd be looking to play around extremes in price movement going into Powell's Jackson Hole speech next Friday, meaning that if we pull back deep enough by early next week, I would look to add positions with the idea of a mean reversion into the event and vice versa. Why Fabian's so smart here is he's not saying absolutes. He's not saying if it's bullish buy, if it's bearish sell. He's actually coming up with a scenario. If the market starts to front run it, he'll look for it as a sell the news in September. If the market is selling off, which is currently doing now, it actually could be a buy and then buy the rumor, sell the news heading into the actual event where the market might actually rebound. So he has multiple if that, then this scenarios, and the best traders in the market, and you'll notice Fabian does this, Paradise does this, and now I do this a lot. We have multiple scenarios at all times. I'll get into what I think the scenario will be. Overall, to summarize, the market hates uncertainty. So the reason we are selling off right now, apart from, market exhaustion, the Treasury bit, and the fact we ran up a lot, is also because the market just doesn't like uncertainty. It doesn't like uncertainty around rate cuts. It doesn't like uncertainty around whether it's going to be dovish or hawkish. So the market is selling off ahead of time, which often means if it gets positive news, it can actually rebound because that uncertainty is out of the way. So the best thing for the markets is going to be Jackson Hole out of the way and the September interest rate decision out of the way. So that's why I think, gun to my head, and of course this can change based on new variables. So if we do get a dovish Powell at Jackson Hole, the market will front run things a lot quicker, and it'll probably run up into FOMC. Whereas if he is more neutral to bearish, the market might continue to be a little bit skittish until the FOMC interest rate decision in September, and then we might run afterwards. I think generally speaking, as a framework, we are range bound on Bitcoin, and I think just this overhead uncertainty doesn't give us enough confidence to run as long as we have this interest rate decision looming over us. So I don't think we attack new highs before mid-September. However, I do think there is a strong chance that once the market has priced all of that stuff in and the uncertainty is out of the way, it has a much stronger launch pad to run into late September, into October. So my basic framework in the market right now is, if you think Ethereum is making highs at any point in the next 6 months, then any sort of sell-off ahead of this interest rate decision is probably an accumulation opportunity. Now, you have to be careful with the exact alts you accumulate, and you have to be careful with how you accumulate, because certain things are going to go up faster than others. We'll talk about a few fast horses now. But generally speaking, I think any dips are an opportunity if you think ETH is going to make new highs at some point in the next 6 months. So all this uncertainty is opportunity, and what I don't like is seeing people chop themselves up ahead of FOMC, because this happens very frequently in the market. It's not an irregular thing for the market to sell off ahead of an FOMC meeting. Now, the first thing I want to establish in terms of playing the altcoin game is that Ethereum is quite good right now. Like, I really think Ethereum has a strong setup to outperform Bitcoin. So ETH is probably my number one trade when it comes to any new leverage trades or any spot trades. I still think the risk reward on Ethereum, the risk adjusted return profile on Ethereum, is stronger than many other alts because it's probably going to lead the pump. So if you're going to play ETH betas, don't try and cut too deep. Just pick a couple. I'll go through a few ideas, trading ideas now, but a coin like ENA would be a good example, because it's been the strongest horse and it's now pulling into the convergence of the daily money noodle retest and this order block down here. So I think this 57 to 61 cent zone is a decent ladder zone for ENA. If you're trading leverage, you want to go down the time frames to look how it reacts, but for me, that is a spot trade. Coins like Chainlink as well, I think it'll continue to outperform. We bought on a breakout, but any dip on Chainlink, I would look to scoop up as long as it maintains this structure, because I think that eventually it's going to break new highs and momentum, and market structure for Chainlink looks stronger than many other alts. You can also move down the risk curve a little bit and look at some Chainlink betas and some other ETH betas. I think Mine Network is a good one. It actually just broke back above this level and has a reclaim on the daily noodle, and it's horizontal as well. So price action wise, it does look good, and you have a clear line in the sand if you want to invalidate on spot, because they are a Chainlink beta. They're part of the build program on Chainlink, and they also have an Ethereum fellowship grant. So in a way, they're a beta to both Chainlink and Ethereum, which right now aligns well in terms of the narrative of the market. They've actually received 2 separate Ethereum grants, so they've been supported by Ethereum, and Vitalik actually mentioned them on slide 3 of his ETH CC presentation. So they have a link to Vitalik. They also have a link to Vivek, who's at Ethereum's BD arm. So they're tied into the ETH ecosystem as well as the Chainlink ecosystem, and price action also aligns. So these are the sorts of plays that I would be looking into. I recently took a position in this. The other thing you can start doing is looking at the trends that you think are going to be big in the next 6 months, if you really want to zoom out, and starting to accumulate those trends ahead of time. Now, it's definitely a game of picking trends that are likely to run sooner rather than later, so you don't deal with opportunity costs. So AI, for example, do I think that'll run at some point this cycle? I still think yes. But do I want to position in AI now? Well, probably not, because of opportunity cost. I'd rather get into ETH betas. I'd rather add link exposure like Pengu, which has been a good meme for now, until I see AI start to wake up, and then I'll get in. I'll pay a slightly higher price, a slightly higher premium from the lows, but I'll get in on confirmation of that trend. So pick narratives you think will do well in the next 6 months, but skew it towards the ones that are probably going to have relative strength in the short term. So apart from ETH betas, RWA is another obvious one. Tokenization is a huge narrative. Like recently I added to my block position. If you don't know what block is, it is the launchpad and the ecosystem project supporting USD1. USD1 is the stablecoin that is officially backed by the Trump family, and they're pushing it really hard with their World Liberty project. So I think it's going to be massive. I honestly think USD1 will be a top 4 stablecoin. So I'm also looking at betas to get exposure to this narrative. And Block actually dipped down into this zone, which is where I added another position around this 12 to 13 cent mark. You also have some invalidation below and a clear breakout trend setup. If you're a breakout trader as well, you could look at trading this on spot. But I think this one will be good over this short to mid-term period because it has strong narrative alignment with the World Liberty launch, and that's going to be launching soon, and there aren't many liquid betas to actually play on the market. So I wanted exposure to this to make sure I was exposed to that ecosystem. It had run up a lot, so I actually called it in my Discord much lower, like around here. It was an amazing trade, I think a 3 to 4x at one point, and then I was just being patient because it ran up so quickly, and now it's finally come down to a major area of interest where it makes a lot more sense. So these are the sorts of narratives that I would also be looking at in this next period. Now, earlier in the video, I said I'd be doing some giveaways for people that signed up to my Blofin link. So we are running a campaign right now. It's an amazing campaign where you can claim up to $1,000 of a deposit bonus. So if you deposit $2,500, you get a $500 futures bonus to trade. With $100, you get $20, $500, you get $100, and so on, as you can see on the screen in front of you. But to reward some of the people that have signed up under my link, I'm going to be randomly giving a couple of people $100. So I've got a random number generator here, and these are the UIDs of accounts that have signed up over the past few days on my link. And let's pick a few people to win $100. Go into your Blofin apps now and look at your account. If you've signed up under my link recently, you may be about to win $100. So let's click generate. Number 28. So let's go to row 28. Congratulations to this user here, 23954, ending in 45. You can pause the video and take a look. I'll zoom in a little bit for you. Congratulations, you just won $100. Let's do another one, generating again, 48. Let's go down to 48. Congratulations. Check your UID. I'm going to pass these over to my BD at Blofin. He's going to add $100 to your account, which is absolutely amazing. All right, let's do one more. Why not? Let's do one more. Number 38 is 239, ending in 14. So 48 here, 38 and 28. You have all won $100. I'm going to be doing this again on the next show, so it's not too late to sign up using the link in the description to a Blofin account. You'll get this great deposit bonus, but you will also be eligible for future fun campaigns that I do like this on the show. And I may actually do some more fun stuff in future, like gifting people portfolios, doubling people's portfolios. So that I'm not going to tell you what it is, but we'll be doing lots of cool random stuff for people that sign up under my link. So just make sure you have an account. You can always sign up for a new account, just at least so you're eligible. And I'm going to be doing this at the end of some shows. So congratulations to the winners there. Hopefully this video helped digest some of the current dynamics in the market. I think overall, the market is looking a little bit heavy in the short term. I don't really expect true resolution until post-interest rate decision, but it can be a big opportunity to accumulate if you play your cards right and look for things with A, relative strength, and B, confluence on the charts. I'll see you in the next video, which will be tomorrow. Peace out.